On Friday, we had the PPI report that came out. This is the producer side of inflation, and it was hotter than expected. You also had the Michigan Consumer Sentiment Survey that came out that was a little bit better than expectations. And that's why on Friday you did see a quite muted day in the markets until the end of the day when you started to get that sell-off. Now guys, let me be honest with you. This last week is nothing compared to what the next week it's going to be. It's like the puppy Super Bowl thing they do on TV compared to the actual Super Bowl. The actual Super Bowl is coming in this next upcoming week, and we are going to go through literally everything you need to know down to S&P 500 technicals and the key level that was rejected on Friday that I'm very excited to share with you guys, and also the economic data and how and when this is going to come out and what it's going to do for the markets, guys. So the only thing that I ask you to do is, if you learn something, if you make it to the end of this video especially, is to subscribe to the channel and hit that like button, baby, because you know it has not seen inflation just yet. So first things first, guys. Let's talk about briefly what happened on Friday, and the markets are very much forward looking, so it's not going to matter all too much, but I want to make sure you guys are caught up to speed because these things are both very important. These aren't like small data points, they are big data points, guys. And you had wholesale prices that rose 0.3% in November, more than expectations. The expectation was for a 0.2% rise, so that was a negative factor on the day. And then you had the Michigan Consumer Sentiment Survey for December, the preliminary survey that showed the index is improving, and it was much better than expectations. And the bit of positive that came out of this survey, because some of it was mixed, but the most positive thing was year ahead inflation expectations improved considerably but remained relatively high, falling from 4.9% to 4.6% in December, the lowest reading in 15 months, but still well above 2 years ago. And that's a big thing. Initially, this was taken as a positive thing because the inflation expectations did fall, and that's a very welcoming sign, but they're still double what the Fed wants to see for next year and for 2024. So I think it's important to bring this up. It's not going to matter at all for this next upcoming week, but in the grand scope of things, the markets did pay attention to this, and that is partly why you've seen the markets sell off so much towards the end of the day on Friday. What we're going to have for this upcoming week is a real doozy. Monday, not so much. You don't really have any economic data coming out at all, besides some bond auctions, a 3-month, 6-month, and 10-year, as well as a 3-year bond auction, which, depending how these interest rates actually come out, the demand for bonds, you can definitely see some big moves in the markets based off of that. For an example, if we got for a, call it 3-year bond, the last bond auction we got, the yield was 4.60%. That means there probably wasn't that much demand for bonds. If you see a lot of demand coming in for bonds and these yields shooting down aggressively, it might mean investors, bond investors that are typically right, are fearful about economic growth. And that would be a negative thing. So I want to pay attention to that, but that is obviously not a guarantee. What is a guarantee is that Tuesday is going to be absolutely insane because you get the core inflation rate year over year for November and the inflation rate year over year for November. This will obviously be coming out at 8:30 in the morning like it always does. For the core inflation rate year over year, you are expecting 6.2%. The previous month was 6.3%. For the inflation rate year over year, you're expecting 7.6%, and the last reading was 7.7%. So I think it's possible, guys, that you could be looking at a much better inflation report than expectations due to commodities really coming down, like the price of, oil and food starting to roll over in a big way. I mean, oil has not seen this hard of a drop in a very long time. That should benefit inflation a lot, because inflation affects, or I should say oil affects every business in the world in one way or another. There's transportation costs in any business. The price of oil, that's going to affect your transportation costs a lot. So you have that in our favor, and I think it could be an overwhelming positive thing on this report. I don't really expect inflation to go up in a big way. If it does, you definitely want to be mindful of that and know the stock market would fall very aggressively. But the next day after that, and this is what makes it so interesting for next week, the day after the CPI comes out, you will get Fed Jerome Powell. At 2 p.m., you will get the Fed interest rate decision. That's the initial report that comes out that the markets widely anticipate, and you're expecting a 4.5% federal funds rate after that meeting. You are expecting a 50 basis point rate hike, a 0.5% rate hike coming on Wednesday, but you will also get at 2 p.m. the FOMC economic projections. Now, this is what is going to be so important to the markets. It's not 50 basis points or 25 basis points. It's where do Fed members think interest rates will have to go? When do they think they will have to go there? And how long will they have to stay there? And you're going to get the dot plot of every FOMC member's expectations for interest rates. And depending on how that goes, that could really shake things up. For an example, markets are expecting 5 to 5.25% terminal federal funds rate. That means that is the rate in which the Fed gets interest rates to, and then they stop raising rates. If the economic projections start to look like the median Fed forecast is for 5.5 to 5.75%, well, that is going to be a very negative thing. And then at 2:30, you're going to have the normal Fed press conference where Fed Jerome Powell gets up there and he's going to give us a very hawkish statement. We already know that. Financial conditions have eased quite a bit. So the drop in the bonds alone, one could argue if it's for recession fears or inflation coming down and the Fed not tightening as much. I personally think it's kind of both, more so the recession fears and the growth outlook, as earnings have been really destroyed for earnings expectations for 2023. Nonetheless, topic for another video. Fed Jerome Powell, he doesn't want the economy to loosen as fast as it is. You've basically cut rates by 50 basis points already, just by how much the bonds yields have actually fallen, thus making mortgage rates and just your interest rates go down as well. So you have seen some loosening since the last FOMC meeting, and I think Fed Jerome Powell wants to not have that continue to happen. So I do expect some hawkishness from the Fed, and then the markets are firmly after that for the February 1st meeting, pricing in 25 basis points with 63.4% probability. 50 basis points is at 33%. So we're going to just want to see how the economic projections come out, and depending how they come out, that's what is going to move the markets the most. Forget the whole notion of small or big rate hikes. It's where do Fed members think interest rates will have to go. That's the difference between a deep recession and possibly a shallow recession, guys. So there is that information. Now, as far as the technicals on the S&P 500, the thing that I really wanted to show you guys, and keep in mind, I don't move any of this, so these lines have been drawn here for a while now, and they tend to play out that way if you keep them drawn here. That's why there's technical analysis, and that's why it's a thing, so you can come back and revisit what's been happening and how the markets have respected these levels. And this ascending level of support, we had this for a while, and then we broke it. And when we broke it, the S&P fell about 1.5%. And then you've been bouncing up and down, certain days, but you have not went back above this trend line. So it looks like we are firmly getting rejected around this trend line. And we're also flirting with the 100-day moving average, believe that or not, sitting at $391.56. You have found support here 2 days right on the 100-day moving average. It has respected it very, very well. The last 2 trading days, Thursday and Friday, you also were well above the 50-day moving average for a majority of the day, quite far off the 50-day moving average. Besides on Friday, you did see that end of the day sell-off, which did bring us about $1 away from that moving average, guys. Nonetheless, you rejected this level. So what does that mean heading into this next upcoming week? It probably means a lot of tug of war back and forth around the 100-day moving average. But if you break that, you're probably going straight down to 383.27 around this 50-day moving average. If you also break that, which I think it's going to take a decent amount of bad news or markets expectations getting upset, then that's where you could really start to fall back to the 370 or the 365 or even the 360 level, and I think that would serve as a lot of support. I don't think you break under the 360 level until you start to get Q4 earnings that come out, even Q1 earnings of 2023, and when those earnings really fall off a cliff, because we have seen the earnings expectations get destroyed at major banks. JP Morgan, Bank of America, Morgan Stanley, they all expect the stock market to crash more than 20% from these levels, and they're expecting the stock market to bottom around that 300 to 310 price for the S&P 500 index. So a lot of that is based off of earnings expectations, and they have been getting cut a lot. So I don't think you get those new lows based off of this next week, but I think if markets are upset, it could get very ugly in a very short amount of time, guys. So that is basically going to be all for this video. Not too much else to actually add. Let me know what you guys think about this information. What is your prediction for this upcoming week? Would love to hear from you guys. Do respond to every single comment, so make sure you guys go ahead and do that. Thank you for watching, and I will see you in the next one.